Hello, this is Lance with Verivest, and today I have with me Jason Riley with Fairway Asset Management. How are you doing?
I'm doing well, Lance.
So I guess the first question I have for you is just, so how did you end up getting into this sort of, alternative investment space and running, these investment funds?
Well, it really was an indirect route, honestly. I started my career actually in a totally different field in the military field as a Navy officer back in 2001 when I became a naval aviator. And I did that for about a little over 9.5 years, and got to the point where I was able to kind of a decision point to either get out or stay in, and I decided that I thought I'd go ahead and see what was out there, which in 2009, after one of the worst economic crashes we ever had. Was probably not the greatest time to go do that. So in the in the grand tradition of guys who didn't know what they wanted to do, I went and enrolled in grad school and used the post 9/11 GI Bill to go and get that education. And while I was doing that, while I was going to grad school, I managed to reconnect with some folks that I knew in Austin who had come out of a hedge fund. I basically called them up and I said, "Hey, do you want a 30-year-old intern?" While I was going to school, and they said, well, "Sure, why not?" So I joined them while they had formed their company, and at the same time, I also had transitioned off of active duty with the Navy onto the reserve side. So I was a little bit of a vagabond there for a bit, just doing school and interning for these guys who were starting their own alternative asset firm, and that was sort of how it started. Not the route I would have ever planned, but there we went. And I stuck with them for a few years. Their company got absorbed by a larger RIA in Austin, and they got me as part of the deal. I finished up my schooling and effectively started as an analyst. And as one of the members of that team ended up leaving for a number of different reasons. I kind of raised my hand and I said, "Look, let me take a shot here. Let me step up." So I found myself working my way into portfolio management on alternative assets, really out of just the sense of they needed somebody to tackle all of these interesting and strange investments, and I was the guy that just kept raising his hand and said, let's do it. I can do it. And it took me to a lot of weird and interesting places in terms of things to invest in. I learned a lot of lessons during that time, both things to do and things not to do. And eventually it got to the point where I was running several $1 million, all focused on alternatives, and we'd found a program that was popular, and it started to take off a life of its own. And that's what became the core of the Fairway Masters Fund. We really had found something that retirees liked, which was a investment that was not tied up in the stock market, not tied up in the bond market, but could generate a good yield rate, a very attractive yield rate, way above what traditional fixed income was doing at the time. And still way above what traditional fixed income is doing. But it wasn't, again, like I said, it wasn't tied to the market. So I grew that product for a few years inside of the RIA, got to 2016 and just started getting a lot of outside attention from other RIAs, who just, the managers were looking at this product and the Fairway Masters product and saying, gosh, this is pretty neat. You're generating yield. You're not correlated to the market. We really would love to do something with you. Of course, kind of the implication was, well, we'd love to do something with you as long as you're not inside of an RIA. And so at the end of 2016, we made basically a bid to lift the Fairway business unit out and go independent. It was a very amicable lift out from our former parent. They're still great clients of ours. They still bring new clients to us. And since then we've continued to do what we've been doing for the last 8+ years, which is just find interesting alternatives that are cash yielding or uncorrelated to the market, and then put them together in a very diversified portfolio designed to protect clients. And so that's sort of us at the in a quick nutshell.
Yeah, no, that's cool. Good story. So with that said, I mean, so how do you find these various investment opportunities? Like, where does the deal flow come from?
Well, the one of the hardest things about alternative assets is that it's very difficult, especially for individuals, to source a lot of the investments that we make. The alternative marketplace is a private marketplace, meaning that there's not commercials being run for these types of investments. There's very limited advertisement publicly. You may see something in the newspaper, but even then, I generally don't see that. A lot of these investments, just the marketing on them is not designed to bring them kind of out of the ether down to individuals. So, the sourcing it's really sort of a multi-prong approach to find a lot of these investments. The first way is, having been in business now, in this business for almost a decade, we've built out a pretty good network in the space. So we have a lot of investments and deal flow that's just brought to us organically, through people we know and people we've interacted with. I've had investors of ours who've brought us deals. I've had partners of ours bring us deals. So that has been a great channel for that. There's definitely a conference circuit out there designed for professionals such as myself and others in the investment industry, where that can be a great place to source a lot of these investments. It's usually a good opportunity to kind of meet and almost and just decide, is this something worth following up on? And then there's also definitely a network of third-party placement agents who are out there, and I probably take half a dozen meetings a week, just talking to those guys who are bringing deal flow to us. But the thing is, for what we're looking for with that focus on yield, it does take a lot of turning over rocks to find stuff that's really applicable. And so, being that filter, being that sorting hat is a big part of our value add.
So in terms of like for you guys, I mean, it's not necessarily any geographic markets that constrain you. It's more of the diversification comes from maybe the underlying asset types. So if maybe you could speak to, I know obviously, real estate is one of them, that in terms of exposure through debt instruments or whatever, but maybe you could just speak to sort of the other types of things that intrigue you as you're constructing the portfolio.
Sure. Really there's actually, real estate is a piece of what we do, but really, I kind of think about three major buckets that we allocate to. The first is the private credit marketplace. And that's a lot of, that's really a lot of bank-like transactions that are all happening in a non-bank environment, meaning they're happening between private groups. And that can be everything like direct small business lending, real estate bridge lending, as Verivest is well aware. That can be a specialty finance thing, such as art collateralized loans. We've done that for the last 10 years, and that's been a very successful program. So a lot of those bank-like sort of transactions. The second bucket that we've invested a lot into is really the income-producing hard assets, and I'm a big fan of those. I like hard assets that are out there in the ground, generating a lease stream or revenue stream of some sort. Although it doesn't necessarily have to be just a physical asset; it can also be things like royalties and whatnot. But examples of that are cell tower and billboard leases. Real estate sale leaseback construction agreements. Really just these physical assets out there that generate that monthly or quarterly income. And then the third bucket is really the esoteric assets. And these are transactions and deals that just don't fall neatly into kind of any other category. And the unique thing about them is they tend to live in their own universe, just isolated from kind of every other risk and every other factor. They tend to have zero correlation to anything around them. And those are things like litigation finance, life settlements, legal fee receivables, just again, stuff that just lives in its own universe. So, so I look for things that fulfill all three of those buckets. Geographically, I don't necessarily have a limit on where we'll look geographically. I will say most of our investments are stateside here. We do have a little bit of exposure in places like Western Europe and Australia. Most of the kind of the Western law countries, places where we can really be sure that anything that we do on the legal side, we have a pretty certainty on the outcome. It ends up taking us a lot of weird places. we end up looking at a lot of different investments, a lot of different assets. And we end up finding a lot of things that, I think that are off the run, but end up being very steady yield generators. And they end up being, these quiet little niches that, that just end up paying out for long periods of time.
Yeah, that makes sense. So, I mean, in terms of the, when you find things that you're looking at, like you said, you're uncovering, turning over lots of stones and things, but do you kind of have like an overarching investment philosophy or like some process that you go through to determine whether a deal, fits or meets a criteria or it doesn't?
Sure. So, one of the very first things we look at is what's its ability to generate cash? Because again, we're focused on generating cash yield for our clients. So I'm not interested in anything that has a long cycle before that cash starts coming back out, that I can distribute back out. So that's really the first place. The second place we look at it and we say, can we invest in something and get a diversified exposure? And what do I mean by that? If I'm investing into, say, a pool of business loans, I don't want to invest into just 4 or 5 or 6 business loans. I want to have exposure to, say, 400 or 500 loans, because I know, out of that pool, there's a certain segment that are going to go bad and need attention and recovery. There's a certain segment that'll become late payers or need modifications. But I do know, and I don't know from the outside which ones those will be, but I do know if I have a big enough portfolio that it almost doesn't matter, because then I can start to view it more statistically, and that big enough portfolio starts to hedge out a lot of that risk and mute down any of the losses. Mm-hmm. And then really, the third thing I look at is I want to make sure that whatever we're investing in is not tied to the public markets. Again, we really try and we've really tried to create a program that doesn't care what goes on in the public equity markets, doesn't care what goes on in the bond markets. One of the things that most of our clients are real tired of is just they've lived through a lot of volatility, especially in the last 12 months. And if we can provide a kind of a solid place that just makes a nice quiet return every month, that's very comforting to a lot of our clients. And then the last thing again, these are all kind of broad based, but the last thing I'll say is also we also avoid any investments that use a lot of leverage. I'm not a fan of leverage at all. I don't think that it should be used to boost your return. I think there's plenty of opportunity out there for what we invest in to generate healthy returns that are very acceptable and very comfortable without the added element of risk that leverage brings. So we've avoided leverage pretty studiously.
Oh, that's great. So, I mean, after you've made one of these investments, what are the various ways how do you go about, whether it's monitoring it or, how are you, where's the value creation from you to the investors or the portfolio, post-investment?
Well, there's a lot of work we always do post-investment, but I like to say, most of the work has to be done at pre-investment. You have to have good underwriting, you have to have good due diligence. And when I first set out anything that we're looking into to invest in, I want to make sure that it ticks all of kind of those boxes that I spoke about previously and for what we're looking for. But I'm also looking for any sort of red flags. What stands out that really bears further investigation or doesn't quite make sense or just doesn't add up. So that's sort of the initial screening process. Of course, all the things you would expect, a full document scrub. We're looking into their bank accounts. We're looking into financials. We do pretty comprehensive reference checks. I always want to talk to current investors. I want to talk to former investors. I want to talk to service providers. I want to make sure that, that everybody that's transacting around any group we invest with, has good things to say about them. And if they have bad things to say about them, I want to follow up and figure out, get to the bottom of it. And then we also will do a comprehensive site visit with any group that we invest in. That's been a little bit of a challenge here in the COVID environment. We've had to obviously figure out some workarounds with that. But the importance of that site visit, I think that almost can't. That's almost one of the most important things we do, because there's just something tangible about getting into some guy's office, seeing the place, seeing the people, talking to the employees, taking a look at the environment. There's been a lot of red flags that have come up from those office visits that have made us walk away from investments at the 11th hour. And it's just stuff you would have never picked up if you hadn't been, sitting there inside that office. But post investment, we do a lot of continual monitoring. We're speaking very frequently with any of the groups we invest with. We still do a site visit, at least once a year. Again, with COVID, that's been a little bit of a challenge. We've had to adapt a little bit on that for this year. But we still do site visits pretty frequently. And again, we're also just looking for any sort of red flag that comes up. We want to pull the trigger on shutting down an investment and pulling back our money early, rather than make the mistake of waiting too late. So again, anything that I can find that causes me to say, that causes me to either lose faith in the management team or causes me to lose faith in the strategy as a whole, I want to get those cues and indicators early and strike early as well.
Yeah, that makes a lot of sense. So in addition to yourself, so who are the other, key players or, folks on your team that help kind of make the magic happen?
Sure. So, it's a little bit of a Riley family cottage industry at Fairway. But that's not to say we don't have a pretty good depth of talent. My brother Jeff Riley serves as the operations manager. He is the wizard when it comes to a lot of the making the making the sausage, making the clockwork tick. He makes sure that a lot of the daily functions, ins and outs happen. We're also advised by our father Charles Riley. Charles has a 30-year history in the alternative asset space. He was formerly the CEO of Austin Capital Management, which was a very successful firm here in Austin for a number of years before he sold his interest and moved to a semi-retired life. But he really serves as a guiding light for us whenever we face the real tough questions, or whenever we're at a crossroads. It's great to call on his multiple decades of experience. And then, we also have a lot of functions that you would have required people in-house for previously. Where the market's moved is there's a lot of outsourcing that is done now. So we have a great administrator in Verivest. We've had the same team and the same individuals tasked to us for quite a number of years now. I look at Amanda Martin there at Verivest as almost a member of our team, because she's provided such great service to us over the years and to our clients over the years. We use Blue River for compliance, and so instead of just having one single guy sitting in here as the compliance officer, I effectively have a whole table of lawyers and specialists in the compliance industry, who keep us on the straight and narrow and make sure that we're doing everything by the book, and who we can also bring all the tough questions to when it comes to that.
No, that's great. No, that's really good. Well, I thank you so much for your time, and you have a great week. Take care.
Right, well, thank you very much, Lance.
Yeah, you're welcome.